Hello, Market Club members everywhere. It's Monday, the 7th of December. Yes, this is another week and another volatile week we expect. As you know, we had a super move on the upside on Friday. That was because of the jobs report and a lot of short covering, because basically when you see a move like this the previous day, a lot of people are short, a lot of professional traders are short, and suddenly, boom, straight up. But look, there's been no follow-through. And this is the concern we have with this market, is the fact that are we going to have a pattern very similar to what we had before? And let me explain what that was. If you go out just a year, you can see all of the resistance above this market. We've talked about this continually for most part of the year, is the fact that you've got a lot of resistance above this market. And the question is this just going to be another one of those, and then boom, another big down move like this? And that's really the concern we have. And that could be the other shoe that drops. It could be another terrorism attack. It could be a number of other things that could happen. But the market, I don't think, has a lot of confidence. Plus, if you look at our trade triangles, we're minus 55 on the Dow. The weekly's down, indicating you should be out of the market, period. But watch this area very closely this week and today particularly. If we see this market close below 50, that would be a signal that we're going to see more pressure in the market. If we don't close higher, don't recover a lot of, clear the screen for a moment, if we don't recover a lot of this loss today, so if we close up here, I said that would be a different picture. But if we close down towards these levels, I would not be that excited about holding long positions. But watch the 50 area. We closed yesterday at 51.40. Actually, we closed on Friday at 51.40. Below 50, not a good signal. This is the S&P 500. Very similar picture. Below the parabolic. Watch the 50 line again. That's not going to be another good sign. 55 trading range. It is a little bit better than the Dow, but not by much. So be careful with this one. This is the NASDAQ 75. A little bit stronger because of the financials and also the techs. But look at the market. Still below the parabolic. It's flirting along the 50 line. Watch carefully. If it closes below there, well, we close a lot lower for the day. I would be very, very cautious on these markets. We've talked about volatility, and certainly the last Thursday and Friday of last week certainly personified volatility, so be careful. Looking at spot gold, it had a big move up on Friday. This is, of course, the Sunday session. A little bit of a pullback. Nonetheless, it looks like it's trying to make a turn. You should not be short this market any longer. Watch the 50 line again if we close over that. And the key level of this week to watch in gold is $1,100. So I'll just put that up on the screen. That's a trend reversal if we go over $1,100 today. So let's see how that plays out. But nonetheless, be very, very cautious with this market about being short. And I think we'll see more sideways action, then eventually a move up. We think 2016 could well be the year for gold. This is the Market Vectors Gold Miners ETF. We talked about this on Friday, and we talked about it before then, earlier in the week, and we like the way this market is beginning to move. You see the weekly is up, indicating a stronger market. I think if we see gold, spot gold, go over the 1100 mark, I think we're on our way to higher levels, possibly up to test the 17 level right here in the short term. We also see a support coming in at 50. We're above the 50 line, another good sign that this market has made a turn and it wants to go higher. This is the euro, had a big move up, you can see, but it's come back down. Now, the thing to look at in the euro, in my opinion, is the fact that it has made a turn to the upside, and this right here is what they potentially call a flag. So you have a move up, then you do this, and then you have another move up. So watch it. If we go over the 109 area again and close over 109, I think we'll see another big leg up in this market, possibly to the 112, 113 area, which it should find some resistance based on where we were right here. So watch that very carefully. Crude oil, we talked about this market on Friday, about how it just was not acting well. It's the lowest close I think we've ever had on Friday. So again, it's down dramatically today. We're down trading at 38.25. We had a 37.50 target zone. We got to 37.96 so far. Possibly we may see that tomorrow. But again, this is not looking good. Very oversold, but it doesn't matter. The trend is your friend, and it still continues down for this market. I said we'd look at some other stocks, and let's look at those stocks right now. First one is Caterpillar. I want to show you Caterpillar because we think that's a really kind of like almost like a bellwether for the general economy. This stock has not been doing well at all. You can see all of our trade triangles are negative. We're below the 50 line. If you scope this out year to date, you can see it's really just been on a steady downtrend for most of the year, and I think that's a really like a bellwether of just how things are going. And I think you have to be very careful about being long Caterpillar at the moment. We could see an easy test of the October lows, and I think we with all of our trade triangles negative, I think we'll see this market under pressure, particularly if we see it close, I would say, below these levels. It's very, very close to those levels. If it closes, let's say, below the 67 area, I think we'll see more pressure on the downside. Next market is Under Armour. Under Armour is really kind of a cool company. It makes, make clothing, sports clothing, but the stock hasn't really acted very well in the last, I would say, since August. If you look at since August, let's just put a little box around there. This is where August began. And you can see that's really contained the market from, let's say, 80 on the downside and let's say 105, 110 on the upside. That's kind of like where we are right now. But I think if you look at the longer term, I think we could see this market trade down to 70, and I'll show you the reason why. Let me just clear the screen for a second, and we'll just put a close only on here, and we'll take the parabolic off, which is really easy. It just clicks, you're there already. Okay, so I want to draw a trend line from the lows, let's say around these levels here, and draw that up. I want to incorporate these lows, of course. These are, you have to have 3 lows to make it work really well. And this takes it in right around, I would say, right around the 70.5 level, 75 level maybe. That's a better choice. But nonetheless, that's where support should come in. But we're below, you can see right here, below the 50 line. Not a good sign. And this is not a good sign for Under Armour in the sense it's, this should be their busiest quarter ever, selling for Christmas and holidays and so forth. But the fact that it's going down, the fact that we had a monthly signal at 84.19, it's 85 now, so you can actually sell it a little bit better if you want to get short. But nonetheless, that is not a good signal to come in the December period for this stock. Last stock we're looking at is almighty Amazon. You can see it's actually done very, very well. But the one thing I want to share with you is this. Let me go to a candlestick chart and let's get a little closer in, say 6 months. And I think this is what I'm concerned about with this particular stock, is the fact that we talked about these divergences before and how powerful they can be. If you look at Amazon, you basically, there was the high in the momentum. If you just scope that up, it's right around there, okay? But we made new highs right here. But look, the momentum, Amazon is going down. That's not necessarily a positive sign for Amazon. Now we do have our trade triangles positive from the 341. Of course, it's been a huge winner for us. It was 664 now, so it's $320 profit. And you also look, the last one was 549, so it's still a very, very nice profit. But nonetheless, having said all of that, it looks as though the market could be tiring, especially with the momentum. That's the concern I would have. Also, you've got a 55 trading range, a little bit of a trading range. I'd be more concerned, but I'm a little bit nervous here with this market. We were looking for like a $700 target zone on the upside. We got maybe close, maybe 82, 83, 683, but nonetheless, I would be a little bit cautious. I'd watch the 50 line very closely in this particular stock. Hey, we've looked at 3 stocks. We've looked at the market overall, but be careful. That's a key word this week. Be careful. I'm Adam Hewson for Market Club. Thanks for watching.